You've heard it before, you can't beat the market. This efficient market theory suggests that all information is already priced into stocks. It implies that finding undervalued companies or consistently outperforming the market is impossible. But don't believe everything you hear. Savvy investors know this theory doesn't tell the whole story. The truth is, you can achieve significant returns, even exceeding 12% annually, by focusing on high yield dividend strategies. This approach requires looking beyond simple market averages and understanding the real drivers of long term stock value. It's about finding companies with strong fundamentals and a commitment to rewarding shareholders. Forget chasing the latest trends or trying to time the market perfectly. High yield dividend investing is about patience, consistency, and letting your money work hard for you. It's about building wealth steadily over time, regardless of market fluctuations. Are you ready to unlock the hidden potential of the market and take control of your financial future? Let's dive in. Stocks can pay you in three ways: cash dividends, dividend hikes, and buybacks. Each plays a crucial role in generating returns and maximizing investment income. Cash dividends are like regular paychecks from your investments, typically made quarterly. Dividend hikes signify growing profits and a commitment to sharing success with investors. Buybacks reduce outstanding shares, increasing the value of each remaining share. Focus on companies prioritizing these profit drivers for consistent income and long-term growth. Let's look at Verizon VZ as a prime example of a high yield dividend stock. Verizon, a telecommunications giant, consistently pays out dividends and has a long history of increasing those payouts. They are considered a dividend aristocrat, a title reserved for companies within the S&P 500 that have increased their dividends for at least 25 consecutive years. Verizon's commitment to returning value to shareholders is evident in its dividend history. For over 15 years, Verizon has steadily increased its annual dividend payout, rewarding long-term investors with a growing income stream. This consistency, even during economic downturns, makes Verizon an attractive option for income-seeking investors. But Verizon's appeal goes beyond its current yield. The company operates in a vital and growing industry, telecommunications. As technology advances and the demand for data continues to surge, Verizon is well positioned to capitalize on these trends and continue delivering value to its shareholders for years to come. Dividend hikes are like getting a raise from your investments. When a company increases its dividend payout, it's a strong signal of confidence in its future earnings potential and a commitment to sharing that success with investors. These increases, often overlooked, can significantly impact your long-term returns. Imagine owning a stock that pays a $2 annual dividend. If the company increases that dividend by just 5% each year, after 10 years, your annual dividend income from that single share doubles to $3.26. This compounding effect of dividend hikes can significantly boost your passive income stream over time. While chasing the highest yields might be tempting, focusing on companies with a solid track record of dividend growth is essential. Look for businesses with sustainable competitive advantages, strong cash flows, and a history of sharing profits with investors. These companies are more likely to deliver consistent dividend increases, fueling your portfolio's growth for years to come. Power compounding is often called the eighth wonder of the world, and for a good reason. When applied to dividend investing, compounding can turn small, consistent dividend hikes into significant wealth over time. Here's how it works. When you reinvest your dividends, you purchase additional shares of the company's stock, and these new shares in turn generate more dividends, which you can reinvest to buy even more shares. This cycle continues, creating a snowball effect that accelerates your wealth building journey. Let's say you invest $10,000 in a dividend stock yielding 4% annually. If you reinvest those dividends and the dividend grows by 5% each year after 20 years, your investment could grow to over $48,000. That's the power of compounding in action. Remember, time is your most potent ally when it comes to compounding. Earlier you start investing and reinvesting your dividends, the more time your money has to grow exponentially. While dividends and dividend hikes often steal the spotlight, buybacks are a powerful tool companies use to enhance shareholder value. When executed strategically, buybacks can increase share prices, boost dividend yields, and signal a company's confidence in its future prospects. When a company buys back its shares, it reduces the number of outstanding shares in the market. This reduction increases the ownership stake of existing shareholders, making each share more valuable. Additionally, with fewer shares outstanding, a company's earnings are divided among a smaller pool of shares, potentially leading to higher earnings per share or EPS, and in turn, higher dividend payouts. However, not all buybacks are created equal. It's essential to assess whether a company is using buybacks strategically to enhance shareholder value or simply to manipulate its stock price temporarily. Look for companies with a history of using buybacks to complement their dividend strategies and demonstrate a long-term commitment to returning value to shareholders. While past performance is not indicative of future results, I believe in high yield dividend investing. Here are my top picks for 2024 and beyond: a telecommunications giant with a long history of dividend payments, a global beverage leader with a history of increasing dividends, a healthcare behemoth with consistent dividend growth, a consumer staples giant with iconic brands, a REIT with a monthly dividend payout. Remember, conduct your own research before investing to maximize your returns from high yield dividend investing. Combine dividends, dividend hikes, and buybacks. Focus on companies with consistent dividends and increasing payouts. Look for stable industries with strong competitive advantages and profitability. Create a diversified portfolio for consistent income and long-term growth. Achieve your financial goals and secure your future. The path to financial freedom doesn't require complex strategies or risky bets. It's about making smart, informed decisions and leveraging proven methods like high yield dividend investing. By focusing on companies that prioritize dividend payments, dividend hikes, and strategic buybacks, you can unlock a consistent income stream and build lasting wealth. Remember, investing is a marathon, not a sprint. Don't get caught up in chasing the latest trends or trying to time the market perfectly. Instead, focus on building a diversified portfolio of high quality dividend stocks and let the power of compounding work its magic over time. Take control of your financial future and start building the retirement of your dreams, one dividend at a time.